These 4 ETFs pay me every week, and together they generate about $325 a month in income, but there's some real risk you need to understand before copying this. I'll show you my exact shares, income, and why this strategy isn't for everyone. If you're new here, my channel is about building income with small, consistent investments, not hype. And quick disclaimer, I'm not a financial advisor. This is for educational purposes only, and past performance does not guarantee future results. Right now, these 4 weekly paying ETFs generate roughly $329 a month, or just under $4,000 a year, paid out consistently through the month, but income is only half the story. We're also going to talk about risk, sustainability, and volatility. ETF number 1, QDTE is my largest payer. First up is QDTE. I currently own 119 shares, and based on recent distributions, QDTE pays me about $1,672 per year, which works out roughly to $139 per month. This ETF uses an options-based income strategy, which allows for high distributions, but that also introduces volatility and downside risk. ETF number 2 is GDXY, which is the Gold Miners, the YieldMax Gold Miners ETF. I currently own 133 shares, and it pays me approximately $1,108 per year, or about $92 per month. Again, this is a high-yield strategy, not a traditional dividend ETF, which means income can fluctuate. ETF number 3, third is CHPY. CHPY is the YieldMax Semiconductor ETF. It's a smaller position, 15 shares, generating about $301 per year and around $25 per month. CHPY adds diversification, but it's also part of a newer, higher risk income strategy. And finally, XDTE. It's the sister ETF to QDTE. QDTE is basically works off of the NASDAQ 100 index. XDTE is the S&P 500. I hold 61 shares, paying roughly $870 per year, or about $73 per month. Like the others, XDTE focuses on frequent income, not long-term capital appreciation. But when you add all of this together, that's $329 per month paid weekly from 4 ETFs. But now we need to talk about the part most videos skip. Many of these funds are associated with the strategies used by firms like YieldMax and Roundhill. These ETFs are designed to generate income, not guarantee it. Distributions can change. The net asset value of these ETFs can decline. And in market downturns, you can lose principal even while collecting income. That's why this is not a core retirement strategy for me. It's an income sleeve. Let me tell you a little bit about myself. Went through most of my working career just relying on a 401k. When I got into my late 50s, realized that wasn't going to be enough for retirement, so I started investing. Start in August 2022, small amounts. This is where I am today, just following me along on my journey. And this approach might make sense if you understand options-based income, can handle volatility, are reinvesting or using income strategically. But if you're looking for safe, guaranteed income, this is not that. Again, I'm not a financial advisor. This is not financial advice, and past performance does not guarantee future results. If you want to see how I reinvest this income, or how this fits into a larger dividend portfolio, hit subscribe. And comment below, would you take weekly income, or is this too risky for you? Thank you for watching. If you see value, please like and subscribe, and I'll talk to you again soon.